Hey everyone, welcome back to Corporate Decoder. Today we are diving into a Form 8K report from Valaris Ltd, a company that drills for oil and gas. It's a bit like watching a tightrope walker over a canyon, but instead of a person, it's a company trying to balance debt, market changes, and equipment. What could possibly go wrong? Let's jump in and see what Valaris has been up to and what their latest financial snapshot reveals. This report is dated April 30, 2025, so it's fairly recent. This is important because it gives us a look at how the company was doing at that specific point in time. Companies use these reports to keep investors updated on important happenings. Valaris has different types of securities, including common shares and warrants, which are basically options to buy shares later. These are listed on the New York Stock Exchange. Having these securities means people can easily buy and sell parts of the company. Now let's talk about how Valaris is actually doing. Item 2 tells us about their financial health. This part usually includes a press release that gives a summary of their earnings. In this case, Valaris announced its first quarter 2025 results. We're going to dig into this to see the real story behind the numbers. To get a clearer picture, we need to look at the exhibits, especially Exhibit 99.1, which is the press release. This is where Valaris shares the details about how they performed. We'll also check the interactive data files, which help break down the information in a more detailed digital way. Exhibit 99.1 is the press release about Valaris' first quarter 2025 results. Press releases can sometimes paint a very rosy picture, so we'll need to look carefully to see if everything is as good as it sounds. Remember, the goal of a press release is to make the company look good. Now, let's step back and think about what Valaris does. They're in the business of offshore drilling, meaning they rent out big equipment like oil rigs. How much money they make depends on a few things: how many rigs they have working, how much they charge to rent them, and how well they manage their costs. This report doesn't show the actual press release, but if it did, we would look for a few key things. Revenue, this is the total amount of money Valaris brought in from renting out their drilling rigs. We would want to see if this number is going up or down compared to last year. If it's down, that could mean fewer rigs are being used or they're charging less for them. Net income, this is the profit Valaris made after paying all their expenses. This number tells us how efficiently they're running their business. A higher net income is better. Day rates, this is how much Valaris charges per day to rent out their rigs. We would look to see if these rates are increasing or decreasing. Higher day rates mean more money coming in. Utilization rate. This is the percentage of rigs that are actually working. If they have 10 rigs and 8 are working, their utilization rate is 80%. A higher rate means more rigs are making money. Debt. This is how much money Valaris owes. Companies like Valaris often have a lot of debt because drilling rigs are very expensive. We would want to see if they're managing their debt well. If we saw that revenue, net income, day rates, and utilization rates were all up, that would be a good sign. If debt was also down, even better. But if revenue was down and debt was up, that could mean trouble. Then since the actual press release is missing, it's tough to say exactly how Valaris is doing. Without specific numbers, it's hard to give a precise analysis of Valaris' financial health. However, we can make some general observations based on the industry and the information we do have. One of the biggest risks for Valaris is the price of oil and gas. If these prices go down, oil companies will drill less, which means less business for Valaris. Another risk is competition. There are other companies that rent out drilling rigs, so Valaris has to compete on price and quality. Valaris could have some opportunities too. For example, if oil companies find new places to drill, that could create more demand for drilling rigs. Also, if older rigs are retired, that could reduce competition. So let's summarize. This 8K report is a snapshot of Valaris at a specific time, April of 2025. It refers to their first quarter results. To really understand what's going on, we need the actual numbers from the press release, which this document doesn't include. But we can still understand the general picture. Valaris is in the business of renting out drilling rigs, and their success depends on things like oil prices, competition, and how well they manage their costs. Without the numbers, it is hard to give a proper opinion of the company financial state. But from this report, we can see that they are at least following regulations and are communicating with their investors and potential investors with these financial reports. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings